Silver breakout imminent. And will we see the gold-silver ratio back at 15? Well, in some breaking news, do you guys remember when I did this video not too long ago, where is Australia's gold? Well, guess what? The parody continues as Aussie Central Bank goes through the motions again, pretending to do a proper audit of its gold at the Bank of England. RBA Assistant Governor on Wednesday revealed the official was about to hop on a plane to check over the holding. And this is an article from the Sydney Morning Herald, where basically it says the RBA is going to check on its $6 billion in bullion, our 80 tons. Remember, we sold most of it in the late 90s when gold was very low in price. Gee, we're smart, aren't we? So why are they going to do this now? Is it because of the political pressure that Senator Rennick have put on them? Is it the fact that they're seeing the change in the monetary system happening right before our eyes because of, US sanctions? And we've seen Russia and China and the Saudis and India, Brazil, others. We've got Zoltan talking about a change from west to east, a change in money to hard money like gold and commodities. Is the Reserve Bank of Australia seeing the writing on the wall and they're wanting to go check? I don't know. And Russia's central bank says it will stop buying gold at a fixed price. The Russian central bank's gold buying program is so successful, it is now willing to negotiate even higher prices for bigger and more attractive deals. And from Zero Hedge, Peter Thiel speaking at the Bitcoin 2022, today all the gold in the world is worth 12 trillion, while global equities are worth 115 trillion. In 1980, the ratio was 1-to-1. With all the gold in the world and global equities having the same value of 2.5 trillion. So what does that say? Either equities are heading for a massive crash or gold is heading much, much higher. So we got this tweet from Zero Hedge saying first poser now Goldman Sachs. And Goldman Sachs is talking about copper sleepwalking towards a stock out, meaning a huge deficit in copper. And they're talking about how, the price of copper hasn't moved, but it's about to skyrocket. And Zero Hedge here just takes a quote from that Goldman Sachs piece and says, in the past 6 months, we have become increasingly concerned of a stock out episode in the copper market as forward fundamentals have tightened, even as price action has remained muted. And then Zero Hedge comments and says, nickel was amateur hour compared to what's coming. Wow. And from Michael, the LBMA Silver Vault holdings down 23.5 million ounces in March. Combined with COMEX, Silver Vault holdings fell 29.3 million ounces in March. Total silver holdings down a combined 68.2 million ounces in the Q1 of 2022. And from Peter, silver could soar 40% if we stop playing shorting games with it, JP Morgan says. In this Bloomberg article, commodities could surge by as much as 40%, taking them far into record territory should investors boost their allocation to raw materials at a time of rising inflation. And I'll put a link in the description below to this article where JP Morgan says be ready for a 40% commodities rally and market shift as demand for inflation hedges may boost allocations, the bank says. So are we finally going to see silver break out? Are we going to see JP Morgan reduce or stop their shenanigans in the paper market? Are they finally going to allow the market to move higher and for real price discovery? So let's discuss the investment demand for silver, the fundamentals for silver, and finally the technicals for silver. Let's just cut to a clip in a recent interview on Palisades Gold Radio with Nick Barisheff.
So you wrote a book entitled $10,000 Gold in 2013. So is this still a reasonable target for gold in your mind, or do you think it's going higher than that?
Well, based on the original calculation, we now get 14,000. And the way I did that was that what used to be the norm would be to have 5% of all portfolios holding gold. Mm-hmm. So today it's not 5%, it's 0.5%. So if that allocation was to move to 5%, you'd have something like $20 trillion moving to gold. Mm-hmm. And if you couldn't increase mine supply, the only adjusting factor is the price. So if you try and push $20 trillion into gold, the price has to go to 14,000 an ounce. Mm-hmm. And if things get really haywire, then people will be scrambling and they're going to want to hold a lot more than 5%. My view is that right now, investors should hold a minimum of 20%, given the current conditions. Mm-hmm.
So I did this video a few months ago, The Real Silver Squeeze, where Rick Rule talked about just investment demand going back to mean. Similar to what Nick was just saying, Rick said that that the mean is usually 1.5% to 2%, not 5%, as Nick said, but Rick says it's 1.5% to 2%, which is the mean. But at the moment, they both agree that it's 0.5%, and so Rick sees a 300% increase in investment demand. And therefore, obviously, we'll see a bull market. But let's just cut to a clip from this video, just a short little clip, and see exactly what Rick had to say.
So for those reasons, I believe that precious metals prices will trade higher. How much higher? I don't know. What I can tell you is this. Over the course of my professional career, precious metals and precious metals securities have had about a 1.5% to 2% market share among total savings and investment assets in the United States. Right now, the same number is less than 0.5%. If demand for precious metals and precious metals equities merely returned to mean, if they ignored quantitative easing, debt and deficits, and negative real interest rates, demand for them would triple. And that's precisely what I think is going to happen. On top of that, Jake, the precious metals equities, relative to the free cash flow they're making at today's commodity prices, not the prices that I think the commodities are going to go to, at today's commodity prices, are cheap. And as you've come to know from these interviews, Jake, I love cheap. So I'm attracted to the precious metals equities. I'm attracted to the great big ones generating free cash flow. I'm attracted to the somewhat smaller ones that are generating even more free cash flow relative to their market cap, because I think the big ones will take them over, and I love to participate in takeovers. I'm interested in the development stage assets because the industry doesn't have very many good development stage assets in the pipeline, and they'll be taken over too. I'm interested in discoveries. It seems that there's things of interest throughout the precious metals equities landscape. I'm particularly interested because of the poor price performance in silver and silver equities. You'll recall earlier this year they had the silver squeeze, which people suggest now has failed. It hasn't failed. It hasn't gotten started. The real silver squeeze is not about a whole bunch of new young people being attracted to the physical silver market so that they can break the banks. The real silver squeeze is when demand for silver and demand for gold return to their 4-decade median or mean, when current demand grows by 3-fold or 4-fold in a market where silver supply can't increase that much. And the most leveraged asset of all, Jake, are the little silver stocks, even the big silver stocks. Our mutual friend, Doug Casey, told me 20 years ago, and it's true today, that the combined market capitalization of the legitimate silver sector is so small that when the generalist money tries to crowd its way into it, it's like, quote, siphoning Hoover Dam through a garden hose. It just doesn't work. That's happened to me twice before in my career, Jake. And while the returns that I enjoyed weren't quite as glamorous as the returns that I enjoyed in the uranium sector, the truth is that the silver sector is one where nobody has any expectation for success, when success is, in my point of view, almost inevitable.
So there's that investment demand, but then there's also just the fundamentals for silver from an industrial demand. And I did this video, when will silver hit $100? And we discussed the fundamentals behind silver, the demand for silver, the supply of silver moving forward, and how just based on fundamentals alone means silver's going much, much higher. But recently, David Morgan did a presentation in Las Vegas, and he did a interview on Stansberry Research, and I'll put a link in the description below to the full interview. But let's just cut to a short little clip from David Morgan.
Let's talk silver now. You say the silver to gold ratio could probably reach 15-1 in a breakdown scenario. Silver is constrained compared with gold because banks do not consider it to be money. You've been talking about a great silver crisis since 2020 here. Are we edging closer to that?
We are. I just did my whole presentation here in Las Vegas on silver. That's what they asked me to do. And I put up a best case scenario for technology going forward to 2030. And based on Matt Watson's work and the amount of input we get through what's going on technologically, there really is not a way to get that much silver out of the ground 10 years out. So from a legacy perspective, something you could go out 10 years and buy now, it's the most undervalued asset. 10 years from now, theoretically, we don't have enough to meet industrial demand, let alone silverware, jewelry, or investment demand. So I think the trajectory as it stands today is very, very favorable to silver. And since it is money in most South American or Latin-based countries, and it is used on the internet as or digital currencies as money as well, I think you're going to see more and more pressure for it monetarily. Let's just go one step further. This is a recent thought of mine. If you look at what Putin did with gold, and we just discussed, think about Mexico being number 1 or 2 producer of silver, and with their new president, maybe they will have an idea of using silver as a means of final payment, right? I mean, if silver was proportional to gold in the historic ratio, you said 15-1, and it was like 4 times what it is now or 5 times, you would have maybe a better monetary base to make trade with. So very interesting times. The monetary system is collapsing. A new one needs to come about. And the biggest question to me is it going to be where we, the people, have control of our money, or are the banks going to have such control that we basically have to bend the knee to them to do anything?
So these have been some of the most eminent people in the silver market talking about investment and fundamental demand for silver. Now I just want to share with you guys a short clip with Bill Baruch talking about the technical demand for silver and where its price breakout could happen from a technical point of view.
But at the end of the day, gold bottoms and trades higher at the onset or early stages of a rate hike cycle. It did it 3 or 4 times in the 1970s when the Fed began and Volcker began hiking those rates very, very aggressively. Gold actually traded higher because when rates go higher, when Fed hikes rates, it starts to extrapolate out the slower growth to come. Mm-hmm. And we start to see, rate cuts actually being priced in at times at late 2023 and 2024. We find that to be bullish gold. Similarly, the U.S. dollar tops at the early stages of a hiking cycle. So, that's something I think is a very big catalyst as well. So I think there's a number of reasons out there looking at gold as being, some inflation narrative hedges but really it's the Fed and extrapolating out the slower growth. I think silver is going to follow along there. If silver can get above $30, you're going to see some massive technical buying that could take it to, out above 40 fairly quickly.
So there you guys have it. I absolutely agree. $30 silver, when we break through that, we're going to 40 in a very quick period of time. In fact, I've done a video about that earlier this year. So do I think we're going to see the gold silver ratio down to 15-1? To be honest, we are in the middle of a monetary regime change. Now, it's not going to happen overnight, but it's begun. The whole Russia, China, India, Saudis, Brazil, African nations, you name it. I've talked about this a lot on this channel in recent times. I think you want to hold gold, silver, and commodities. And just hold them. We don't know where this thing's going. A couple of years ago, I would have said, no, gold silver ratio might get down to 40, maybe 30. And at that point, I'd probably sell my silver and move into gold, or depending on other asset classes, I might sell my silver and move and buy some more investment properties, or buy some stocks that I either trade options on to generate premium and revenue, or I'd buy high quality, deep value stocks that pay high dividend yields. But right now, the way the globe is playing out, I don't want to sell my gold or silver anytime soon. It's a very tricky one right now, because I believe we're in a monetary system regime change, and it's those that hold real assets that are going to benefit, in my opinion. So anyway, what do you guys think? Love to see your thoughts and opinions in the comments below. If you like this video, guys, please hit that like button. Really do appreciate it. If you haven't yet subscribed, do so and hit that notification bell. Take care, everyone, and I'll see you all again on another episode of Finance Uncut.